Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So that's it for the doji. The second one I like is the hammer or the hanging man. In fact, these two figures are the same, but the hammer occurs after a bearish trend and gives rise to an uptrend, whereas the hanging man occurs after a bullish trend and gives rise to a downtrend. So I mean that if you have change the color. If you have a bullish trend with several candlesticks on the upside, and you see this Japanese candlestick pattern, this one or this one, and like for as for the doji, you have to wait the day after to confirm the pattern. And if you have the day after an open price just below the body, just below the closing price, sorry, the pattern will be validated. So if the trend is bullish just before the pattern, the candlestick, the name of the candlestick is hammer. So calls for is a hanging man. Sorry, I did a mistake. Calls for a bearish return. And if you have a bearish trend with several candlesticks on the downside, and you have this pattern and an opening position above the body, above the body, I mean in this area, the hammer will be validated. So, like for doji, the day after is very important to validate the candlestick pattern. I hope it's clear for all. The next candlestick patterns I like is evening star and morning star. The evening star formation is a 3-bar top reversal pattern and therefore a bearish formation. The three candles are following. So the first has a big empty body, this one. Empty body or white body or green body, depends on your platform, as I said earlier. The second one is a small bodied candle that closes above the first one, this one. And the third one is a big filing body, a big black body, a big red body, with quite the same size as the first one. And at the close of the third day, you have the confirmation that you have an evening star, and that the last bullish trend is over, and that this bullish trend is turning to a bearish trend. Okay, so and after morning star is the same, but in the opposite. I mean that it's a 3-bar bottom reversal pattern, and therefore a bullish formation. The three candles are following. So the first one has a big filing body, a big black body, a big red body. The second one is a small body candle that closes below the first one. Okay. And the third one is a big filing, big empty body, a large white body, a large green body, and at the close of the third day, you have the confirmation that you have a morning star and that you have a bullish signal, and you can enter a long position at the closing bell, at the close price of the third day. hope it's clear. The next major candlestick pattern is the bullish and bearish engulfing. Bullish and bearish engulfing are my favorite candlestick, Japanese candlestick pattern. This is maybe the one I use the most because these candlestick patterns are very, very effective. The bullish engulfing pattern is a major reverse up signal, as I said, and in the bearish trade, there is a day represented by a black body. Okay, just there. And the day after, you have a large white body, but the white body, the open of the white body is below. Okay, just there. The open of the white body is below the close of the close of the previous body. Okay, just there. So it's there. The open is below the close of the body of the first body, and the close of the second body is above the previous body. So bullish engulfing means that the opening and the closing price of this candle wrapped the first body. That's why we can say that we have a bullish engulfing pattern. So this Japanese candlestick pattern will be validated at the end of this day, of the second day. So you can enter a long position around at the closing price when you see that the closing price will be above the body of the previous one. So you can enter a long position or to close your short position. Regarding the bearish engulfing pattern, this is the same. This is the same one, but in the opposite. I mean that the second candlestick is a black candlestick pattern, which wraps the first one. So the bearish engulfing pattern works like the bullish engulfing pattern. The opening price is there, the closing price is there, and the body wraps the first one. And at the closing day of the second day, you have the confirmation that you have a bearish engulfing pattern, and you can enter a short position or to cut your long position. Because the previous trend was bullish there, the previous trend on this one, on the bullish engulfing, was a bearish trend. So, to finish the presentation on Japanese candlesticks, I will show you some example on two different charts. So we will see a Japanese candlestick pattern I present you. So in this chart, we can see that we have an evening star just there. Okay. So the evening star is validated at the closing price of the third day, just there. So just there. Change the color to be clear. So there you have a selling signal. So at the closing price, you enter a short position or you cut your long position after the bullish trend because you have the validation of the evening star. And you can see that this evening star was effective because we can see that we had 1, 2, 3, 4 days on the downside.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.